Thank you, President. We're going to open to questions in a second. I just want to remind everyone that we also have 5 of the bank's vice presidents in the room: Vice President Fayol, Vice President Hudak, Vice President Vapavori, Vice President Scannapieco, and Vice President Taylor, plus a number of senior colleagues in the room. So if you have a healthy appetite for detail and specific questions about specific sectors and so on, we can take them up now or later on, if you have time, in one-on-one discussions with colleagues and the vice presidents. So, shall we start with questions there on the right?
Thank you, Florence Autrel, AGFI. I have 3 questions. One on the UK, the exit of the UK. How do you see that? You have a lot of commitments there. So first, what will happen with that? How do they exit the board and the capital of the bank if they have to? That's one. Second, simple question: what is the funding cost of the bank? And third, there was an inquiry launched last year about Volkswagen and other car makers whose investments might have been financed by the bank and might have financed these fake softwares that are now put into question. So where are we in these inquiries?
Thank you very much for these really interesting questions. They all need a little bit more time, I guess, in order to answer precisely. Brexit, general remark first. The Brexit decision of the British people was a terrible shock for us in the bank. We regret it very much. The United Kingdom is a very important shareholder of the bank. 16.1% of our shares are in British hands. And the United Kingdom and the bank have made very, very good use of that. The portfolio in the United Kingdom is far above 50 billion euros. And I can tell you it's an excellent portfolio. The quality of the projects we have financed there is particularly good. And the United Kingdom, on the other hand, is a country among the big member states, the only one, which does not have its own big national promotional bank like CDC in France or KfW in Germany or CDP in Italy, ICO in Spain, BGK in Poland. The United Kingdom is relying heavily upon EIB, and therefore I think also we will be missed in the United Kingdom if we have to reduce our business there or disappear completely. It's not clear. The question how things are going to move forward now is, of course, unclear. You might have seen on your mobile devices that just a few minutes ago, while I was speaking, the Supreme Court has decided that parliamentary is approval for the triggering of Article 50 procedures. What that means is not quite clear to me yet, but I do not believe it will have a fundamental impact on the further proceedings. The process has gone to a stage where probably things now will move forward. The United Kingdom, as I said, is a country which benefited very much from our activities. Last year, the lending in the United Kingdom was far above 7 billion euros. That is enormous. The way the exit will take place and the way it has an impact on the bank is completely unclear. We cannot answer that. Because the statutes of the bank, which are based on the Treaty of Rome, are quite clear. Shareholders of the bank are the member states of the European Union. If there is, at the end of the day, an option to change that statutorily and allow a former member of the European Union to remain shareholder of the bank, is completely open. Pure speculation. And therefore, I think we should not exclude any possibility. Don't prevent nor preempt is my rule. We are continue to doing business in the United Kingdom. The United Kingdom will remain shareholder at least for the next 2 years. We have good projects and a very solid relationship with industry and government in the United Kingdom. If the United Kingdom would or will withdraw from the bank, it will have to be negotiated among the shareholders. and that is going to be a very, very difficult endeavor. And that probably will then depend on the overall situation in these 2-year-long negotiations. And I'm afraid, and that's a problem for us, this question will probably be discussed at the end of the process, not at the beginning. And therefore, we are a little bit in limbo. Funding costs, well, that is a very actual and day-to-day development. The fact is that in view of the strength of the bank, our funding on the financial markets in the entire world, changing every year between, let's say, roughly 60 to 90 billion euros, is extremely favorable. People, investors around the world, entrust us their money knowing that we will use the money well and they will get it back. So from that point of view, our funding is favorable. The idea of the bank, the whole philosophy, is to pass this financial advantage forward to our clients, and therefore the clients who finance their projects with an EIB loan get this loan to very favorable conditions. So we are very competitive, and that is true not only in the United Kingdom, but elsewhere. Last question on Volkswagen. Volkswagen is a long-term partner of the bank. We have worked with Volkswagen for many years. I don't see the figure here right now, but for ages. In particular, also when, in the view of their activities outside the European Union, when we accompanied establishing sub-companies in other countries, like in Mexico, Brazil, Argentina. And it's a painful experience, I must say. We also have been involved with Volkswagen on research and technology. However, we have not found any indication that our loans might have been used for fraudulent purposes, which are the source of the problems for Volkswagen. I can tell you that at the meeting of the World Bank and the IMF, the autumn meeting in Lima, we were all of a sudden confronted with the allegations against Volkswagen. And it was a deep shock for us, because we have been proud of our cooperation with Volkswagen, also on our innovative contribution, and we are, on the other hand, the climate bank. And therefore, we are very, very unhappy about this development. There is nothing in outstanding loans with Volkswagen anymore. So from that point of view, we have a clean slate. But it still has an impact, because if you want to be an avant-garde in climate change action, then you would want to be associated with partners who stick to their promises. And here we have been disappointed.
With a green sweater, and then.
Thank you very much. The question to the President Hoyer. Given that the boosting investment is your main priority, have you noticed a decrease on investment in Poland? And do you see that it has impact on your financial activity in Poland? How can EIB help change the trend? Thank you very much.
Poland in EIB has been a success story for EIB and also for Poland. The lending in Poland last year was 4.52 billion euros. That is an amazing figure. If you compare this to other big countries, Poland is doing extremely well, and we are very happy. And we believe, although we don't have national targets, quantitative targets, we believe the figure for 2017 will certainly not be below what we have achieved in 2016. So we know that there are political issues to be discussed between the European Union and Poland, which of course we have to observe. But on the business side, our cooperation with Poland is excellent. The Polish finance minister, Mr. Morawiecki, is presently the chairman of the board of governors of the bank, so there is permanent exchange of views, and we are very happy.
going to go there. Please identify yourselves when you ask the question, if you don't mind.
I'm Jeremy Wolf, and
No, sorry, the lady just behind you.
Thank you. Maria Psara from Athens newspaper, Greece. I would like to elaborate a little more about EIB's activities in Greece. And one more question, why isn't Greece between the countries more benefited by your activities? Thank you.
Why the country is not benefited?
Not one of the most benefited.
I think you will find, I mean, I mentioned the example of Cyprus. That is, I mean, the record figure you can think of. But there isn't probably any country where our activities would be weaker than, would be stronger than in Greece. Greece is the shining example. Greece is the only country for which we have even partly changed our business model. You know that we are a very lean bank. We are highly concentrated in Luxembourg. Our experts are in engineering as well as in financing and legal. They are all in Luxembourg. In order to be closer to our Greek clients, we have changed that for Greece. We have set up a dedicated investment team for Greece under a deputy director general, which is working very, very successfully in Greece. And we are going to continue and expand that. We want to move closer also to smaller clients in the corporate business side. From that point of view, I'm very happy with our investments in Greece. We have a portfolio in Greece that represents 10% of the GDP of the country. And from that point of view, we are not only second to none, but also Greece is second only to a few in the European Union, like Cyprus. So we are in a very good way. I would hope that we could do even more because we know how urgent a further improvement of the situation in Greece is. But we are doing our part.
Okay. Let's go to the gentleman there. He's been very patient.
Thank you. Peter Tever with EU Observer. Hi. A follow-up on the Volkswagen investigation. Does it mean that you will now begin lending to VW again? And if so, are the terms going to be the same as for any other company? Or will you follow through with the, I think it was in an interview you mentioned that perhaps the lending criteria would be more strict to VW. And then secondly, we saw earlier this month in the US, the EPA issuing a notice of violation against Fiat Chrysler, and the French authorities are investigating Renault. Are you also looking at your loans at other car companies in this respect?
On the second question, clear yes. We have learned the hard way, and we are looking at all our corporate partners. And one would have had to be naive not to see that beyond Volkswagen, other companies might be affected as well. So we are approaching this with open eyes. On Volkswagen, there is nothing new in the pipeline. So there are no negotiations taking place, and I don't see anything coming up in the foreseeable future.
Yeah, gentlemen.
More strict criteria.
Yes, of course. Of course. When we have learned, since we have learned, we are going to be more open-eyed than ever, and therefore the criteria will be stricter as well. Although we must say that, as far as we know and we have investigated very, very thoroughly, our loans to Volkswagen have not been abused.
Thank you very much. Okay. Can you hear? Yeah. I'm Jeremy Wolf, and I write for Occupational Pension Fund Managers for a magazine. And we've seen that whenever I ask the question, how much of the 4 to 6 trillion funding in that sector is coming into the EIB, I find virtually none. I don't get any positive answer. And I suspect that there's some legislative block which is going to be solved soon, such as CCTB or something. And if these funds are released to come into the EIB, would it have a significant effect on the EIB program?
I cannot respond to that question precisely because I would have to refer to our financing department, and Ayla Cravey, our director for funding, is available for you afterwards, so we can have more precise answers. But the fact is that last week in Davos, I had extensive talks also with sovereign wealth funds and pension funds, in particular also from Canada. And it was obvious that we have a problem with, in particular when it comes to infrastructure, with the tradability of these assets. And the approach taken by the wealth funds and the pension funds in Davos was clearly it would be urgent to establish an asset class for infrastructure which would, based on a streamlined reporting system for infrastructure projects and a precise and harmonized description of the project's details, lead to a stronger involvement of pension funds and sovereign wealth funds in activities of multilateral investment banks. This is in the making, and we would be very happy if we would see more of the very, very strong and wealthy and very well-equipped pension funds and sovereign wealth funds in financing of EIB. We are completely open to this. Excuse me. When it comes to venture capital, I would like to pass the floor to the Deputy CEO of the European Investment Fund, who is more in the day-to-day business with these people.
Thank you. Well, from the EIF side, we are not talking about trillions, but possibly billions or hundreds of millions. We are working closely with pension funds, institutional investors who are co-investors in many funds with us. But we see also potential, and we have already experience in working more closely for managing on behalf of pension funds investments. And this is particularly in a time where interest rates are very low, or where pension funds have to ensure a certain return. And typically they allocate a small percentage of their assets under management for upside types of investments. And typically venture capital and private equity can represent such types of investments. So we are already having arrangements with a number of pension funds who have entrusted to us hundreds of millions, let's say. This is the order of magnitude currently for investments, but we are looking forward to extend that. And we see clearly potential, particularly in the growth phase, so in the phase where companies, mid-caps and so, need bigger ticket sizes to sustain their growth and to stay also in Europe with their growth and not have to relocate. And there we are looking forward to having more cooperation with pension funds to leverage public and private money.
Okay. Yes, please, in the front.
Thanks, Simon Taylor from MLEX. If I could just take you back to the Brexit implications. You said it would be very difficult and very challenging. Apart from, could you give us a better idea of what some of those challenges would entail? I mean, for example, the UK's capital share would be fairly easy to deal with, but what would happen, for example, to outstanding loans? Would they have to be wound up more quickly, or would there have to be a transition period, or what other sort of issues do you expect to have to grapple with?
As far as the stock is concerned, the investments we have in the United Kingdom, I don't see any reason why we should act. This is good investment. Projects are very sound. The United Kingdom is a completely reliable partner, and the companies there as well. So from that point of view, no erratic action is on the horizon. So I'm not a person who likes to say business as usual, because I like that in general, don't like that in general. But I must say we have to have a steady hand here in the business with the United Kingdom, not preventing nor preempting anything. When it comes to new business, of course, we have to talk to our partners, both among the 27 and among the one, because the legal environment will change with the Treaty on European Union not being valid anymore for the United Kingdom. And the projects we are financing, they are long-term investments. So some of these projects will run until 2050 and more. And therefore, you have to come to a point in time when you negotiate with the UK authorities how these investments will be protected in the future. You see that as EU bank, we benefit from our status, and that status is guaranteed via the EU treaty in the member states of the European Union. So a protection of similar kind would also have to be negotiated with the United Kingdom, but there is no reason to rush. And I hope that the process that will be triggered, obviously very soon, will lead to a constructive way to come to conclusions, because the exit from the European Union, in my view, already in itself produces considerable damage for all of us in Europe, and most of it for the people in the United Kingdom. But that's my very personal opinion. We have to respect the results of the people of the United Kingdom. We should not do more damage. I hope that the negotiations will take in a constructive way that leads to a minimization of further damage.
Thank you. Zoltán Gyévai, Hungarian Press, figyelő financial newspaper. My question is, you said that you would welcome expanding the loans and guarantees to other areas of the EU budget. I'm just wondering, could you be a little bit more specific? What are you in mind? What kind of new chapters, budgetary chapters, can involve this kind of new financing? And I'm also wondering your opinion about the impact of this. So let's say getting rid of more and more from grants and shifting the focus towards the loans, what kind of impact it could have on the cohesion policy, the cohesion funds? Obviously a Hungarian question.
I'm tempted now to go onto a slippery slope here. And I want to leave the next time I visit the European Parliament unharmed and with no scars. But, you know, when we first discussed the idea of the investment plan for Europe with Mr. Juncker, when he still was the opposition leader in the Luxembourg Chambre des députés, we were thinking about how to shift money in the EU budget. You have roughly a volume of 1,000 billion euros there for the budgetary period, and he wanted to shift 16 billion from grants to guarantees. And it was very difficult for Mr. Juncker, when he was then President of the European Commission later, to find, together with his colleagues, the budget lines from which you could take this money. And it was very, very courageous, I must say, and also the Parliament who had to approve this was very courageous, and the commissioners involved were very courageous. They targeted CEF, the Connecting Europe Facility, and Horizon 2020. These were the main sources for these 16 billion euros. And in Horizon 2020 and CEF, you do particularly important projects. So it certainly was not easy. And it worked only on the basis that we would do or make more out of these 16 billion, by the way, plus the 5 billion that the EU bank itself put into the whole pot in cash from our reserves. So leveraging the 21 billion in a good way, in a very good way. Now, that has worked very well. So why shouldn't we give advice to Parliament and Council and Commission to look into other spheres of the budget, be it in agriculture, be it in transport, be it in other areas, whether something similar could be done, guaranteeing that for the political objectives in this field, the outcome would be better than with the present system, which more or less relies upon grants and subsidies. That would have to be concretized, but I think the Juncker plan is something that has to be seen in the wider, the bigger frame, and that bigger frame has been identified or labeled by Kristalina Georgieva when she was budget commissioner as better spending. And that's what the European Union urgently needs. Roger on this as well?
Yes, with great pleasure. I think already we are in the period 2014-2020 from the EU policy side and spending cycle. And what has been the motto was to do more with less money in this period. And I think going forward, we can assume that we will not have, again, an explosion of the EU budget, but rather probably a reduction. So even more, we will need to do even more with even less in the future. If you look at what we have done in this period, the EU has roughly tripled the amount of budgetary resources which have gone to the financial instruments. It's still a very small amount. In the area of structural funds, covering rural development, fisheries, social funds, and also agriculture, it's roughly in the order of 30 billion. In the area of internal policies, covering, all the majority of the instruments we do for SMEs and innovation is around 10 billion. We see clearly a potential for doing much more in the area of financial instruments, to open up the pots of money, to do certainly grant money as in the past, but to do more also combination between grants and financial instruments, and to have financial instruments more mainstream. And clearly we are working, EIB and EIF, very much now on the area of agriculture, but we see also potential to step up our already solid engagement in the area of social inclusion, social entrepreneurship, also in the area of culture, creative content industries, in the area of combination between the structural funds and the EFSI, the Juncker plan, and in working in trying to leverage with the private sector, but also with national promotional institutions, the amounts of finance that we can make available. And last but not least, let me repeat again that we see a big potential also in the area of equity and alternative sources of finance, such as securitization, to revitalize market-based finance to complement bank finance. And equity finance, coming back to the question you had raised on pension funds, in the growth stage will certainly address another market failure we have in the EU. The first market failure is certainly the early stage with the seed capital we need to provide, but it's also important that we maintain the very successful companies that we have nurtured with private and public money once they become even more successful and they start to grow and they have much higher financing needs. So there's a lot we can do with financial instruments there.
I would like to add one point. We shall not overemphasize, though, the importance of financial instruments and budget guarantees, because in particular in the context of cohesion policies, of course, grants will continue to play a very important role. Not every infrastructure project, for example, is bankable right at the outset. So, of course, grants will continue to play a role. However, there is certainly space to assess further where financial instruments and budget guarantees could be, so to say, added on. Thank you.
Okay. Any more questions? Yes, follow up.
Thank you. A short follow-up on Brexit. When we listen to you, we have the feeling that you would like the EIB to keep its commitments, but that it might exit the capital of the bank. But the very basic principle of banking is that the risk of the investments are shared among the shareholders. So how can we imagine that 27 member states, if they are not on the board in the capital anymore, guarantee 50 billion investments, long-term investments in the UK? So I don't see how we can have a kind of compromise that the state, we keep the past, but they withdraw for the future.
I think there is a misunderstanding. There is no doubt that if the United Kingdom one day is not a member of the European Union anymore, that it will be different kind of cooperation than we have now. On the other hand, the European Investment Bank, the EU Bank, is lending not only in member states of the European Union, we are lending in Norway, we are lending even in Switzerland, we are lending outside Europe. So, but this is a question of dimension. I think the lending in Norway is, or the lending in the United Kingdom is probably 44 times bigger than our lending in Norway. So that shows that there is a big difference, but it is not excluded from the beginning also to do business in non-European and non-EU countries. The quality of the investment is decisive. The quality of our loan book and our rating on the international markets, also the high quality of our loan book in the United Kingdom is relevant. Let me raise one issue in this context of the Brexit, because I would not like to have to see this forgotten. When we operate outside the European Union, the United Kingdom is a very valuable partner. DFID, British development policies, is leading in the European Union. And therefore, there might be an interest on our side in the future to also cooperate in these activities together. But of course, the objective is not to do something good for the United Kingdom, but to do something good for the European Union and its bank, and the citizens of the European Union. This is our mission. But I don't see why we should exclude cooperation in a civilized manner also in the future. The United Kingdom will remain our ally, our friend, our neighbors, and it's time for de-escalation.
Any more questions from the room? If that is not the case, at this point I would thank you very, very much and wish you a very good day.
Thank
Bye.
you.